Welcome back, traders, to episode 2 of my lecture notes on the ICT Core Content Mentorship. I hope you found the last video insightful and eye-opening if you didn't know how the market worked and who controlled it. We'll dive deeper into the underworkings of the market in this one, titled How Market Makers Condition the Market. I hope you find this video interesting, and please help support my channel by giving this video a like and subscribing for more lecture notes. Now let's dive in. So this diagram was actually presented in the first episode, but I skipped over it because it really wasn't the main focus. Here we're going to dig into it more, and it's kind of hard to understand what ICT is trying to illustrate here, so let's take our time and break this down. These two circles represent two groups of traders in the market. This small one represents the group he calls smart money. These are the elite of the elites in the world, the ones with more money and power than everyone else. You might call them the 1%ers, but they're more like the 1% of the 1% of 1% of the 1%ers. Who are they? Banks. And I'm not talking about any small little local bank. I'm talking about central banks, the major central banks. And there's only a handful of them, so that's why this circle is much smaller compared to the other one. So that's smart money. This larger circle, uninformed money, represents everyone else. You, me, your favorite trader on social media, the best trader on YouTube, even institutions like JP Morgan or Goldman Sachs. We are all part of this much larger group of uninformed money, or you can call it dumb money or retail or whatever. Now you can think of both of these circles as wheels or gears, and they're connected with this belt going around both of them. Now imagine both wheels are turning and the belt is moving around. So ICT is using this mechanical diagram to represent the market. Both groups are participating in the market, but the question is, which group is driving the market? Is it the uninformed money, because there is just so many of us, and we're powering the market with buying pressure and selling pressure, and smart money is only turning because uninformed money is turning and pulling them along? No. Even though there's so much more of us, we are only a tiny pool in terms of money compared with smart money. They are the central bank. They have a vast amount of money that we can't even fathom. They control the price, they control the market. They are the ones that is turning and driving the market whether you like it or not, and uninformed money is just along for the ride. So this is the market efficiency paradigm. When we talk about price rebalancing for fair value, we're talking about fair value for smart money, not necessarily uninformed money or retail. When we talk about the market wants to be efficient, we're saying efficient for smart money, not retail. Even though they are driving the market, they're just quietly in the background doing their thing, not drawing much attention to themselves. Whereas this group, you have your loud social media trading gurus saying, look at me, look at my car, look at my lifestyle, always needing attention, complete opposite of this smaller, quiet group of smart money. And your goal should be to move out and leave this circle of uninformed money and live here with smart money and do what they do. Meaning you have to drop your retail logic, your retail indicators, and use smart money tools taught in this mentorship. If you don't, you may be in an endless cycle of taking one step forward, but then one step back, because you cannot get rid of your belief in your retail systems. So what does smart money do? Well, they do a lot, but let's focus on what we talked about last time in elements to a trade setup. We talked about the 4 market conditions and how we can take advantage of price action by using reference points to navigate the market as price moves from one market condition to the next. To further help, we can apply each market condition to a time of day. Here, ICT is applying this to an entire day for the Forex market, but since the market is fractal, you can also apply this to just one session. So here's an example of how someone could apply this to, say, the New York morning session for futures. So this is just an example. Price will not always play out like this, but main understanding you should have here is that we're applying these concepts to time of day. So for example, we always start with consolidation. And consolidation, let's say 8:30 news, we didn't do much, or we don't have the 8:30 news, so pre-market consolidates up to until the 9:30's opening bell. Then at 9:30, we have an expansion move. So from 9:30 to let's say about 10 o'clock, we have an expansion move, and that could be synonymous with this Judas swing right here, a manipulative move. And then we will, let's say, go into a reversal at 10 o'clock, expanding in the other direction. Then from 10:30 to 11 o'clock, suppose we have a little bit of pullback, we have a little bit of a retracement. Then around 11 o'clock, we continue the expansion of that reversal up until 12 o'clock noon. Then price retraces a little bit and ends the morning by going back into consolidation for lunch. This lunchtime consolidation will then be used to start off the afternoon session, as we always start with consolidation. So that's an example of how the morning could play out. The important thing here is to apply the market condition to certain times of day. I'm using critical times here where there are news events, or at the top of the hour where things could change. Remember, use the reference points to validate whether the market condition is changing to the one you're anticipating or not. Hopefully my example was easy to follow, but here's ICT with a Forex example.
Every day starts with consolidation, Asian range. After midnight, there's a manipulation that takes place. That's expansion. It's coming in the form of a Judas swing. What is it doing? It's making the higher low in London. That's the London swing for a reversal. That's a run on stops. Then there is another expansion move, okay, down into the New York session. Then there's going to be what? Another consolidation. That's the New York consolidation going into the 8 to 8:30 news embargo lift, where there's going to be another injection of liquidity or a reversal. Then there'll be another expansion, and then we go into London close, which is another reversal condition. And then what happens? The market goes in consolidation for the rest of the day.
So this one was all about understanding that smart money controls the market, and we want to align ourselves with what smart money does. So because the market is not random, we're able to apply logical concepts like market conditions and anticipate how price is going to move. We can further build context by applying these to certain times of the day, critical times of the day when things could change. So hopefully you enjoyed this one. Please give this video a like and subscribe for more lecture notes. But until next time, safe trading.